Hey family, Timalyn Bowens here, America's favorite EA and also the owner of Bowens Tax Solutions. In this video, I wanted to do an overview of the Injured Spouse Allocation Form, which is also known as IRS Form 8379. This is the latest revision of the form, and I received a lot of questions about it in comparison to innocent spouse relief. So I'm going to go over what this form is for, how to fill it out, and how long you will be waiting to hear back from the IRS, okay? So the whole purpose of this form is when you file a tax return jointly with your spouse. And when you are due a refund, but that refund is actually taken by the IRS to fulfill a past due obligation of the spouse. So this could be a student loan they defaulted on, it could be back taxes, it could be child support, spousal support, but whatever it is, you are seen as the injured spouse because your refund is taken to go towards that debt. So you may be an injured spouse if you file a joint return, as I said before, and either all of your refund is taken or a portion of the refund is taken, or if you expect it to be taken to take care of your spouse's debt. Now, these debts have to be legally enforceable. So we have a list of what those are here in line 3. So as I said, federal tax, state income tax, state unemployment compensation if they receive that and they shouldn't have, child support, spousal support, federal non-tax debt such as student loans. That is one of the most popular ones is defaulted student loans. Okay. So a notice of offset for federal tax debts is issued by the IRS. So a lot of times when this happens, your spouse already knows. That's why it's really important. You want to make sure that you understand any outstanding debt that your spouse may have before you actually file taxes together. So you can be proactive and go ahead and file this form with your tax return or file married filing separately instead of filing with them. Now, this form is going to be completely different than the innocent spouse tax relief. That is for people whose spouses have um they've filed the return improperly, whether it be fraudulently, sorry, I don't know why I'm stumbling on that word, or if they were just negligent and didn't do their due diligence in getting that done. All right? So you're going to file this 8379, as I said, either with your tax return or you can file it after you realize that your portion of the refund has been taken. All right. You must file Form 8379 for each year you meet this condition. So if your refund was taken for 2021, 2020, and 2019, you have to file a separate form for each one of those years. All right. And you have to file it within 3 years from the due date of the original return, including extensions. Or you can file 2 years from the date that you paid the tax that was offset. All right. So whichever one is later. You can file this with your return electronically, or you can file it by paper after the money has already been taken. So typically, we're looking at 14 weeks. So another reason why you want to be proactive, it takes 14 weeks for the IRS to process this if you have to file it by paper. If you file it electronically, it'll take 11 weeks. We're going to talk about where to file, but let's get to this first, okay? So part 1, you're going to enter the tax year which you're filing this form for. Let me close that. So let's say it's 2021. All right. Then there's a series of questions that you need to answer. So, did you or will you file a joint return? Yes, that's the whole reason we're filling this out, right? Because we don't want our portion of the refund taken. Now, by all means, you can do married filing separately. In that situation, you wouldn't even have to worry about this form. All right. But there may be tax benefits for your spouse and even you if you do file together, and that's why you would want to still file as married filing jointly and fill out this form. For example, if you do married filing separately, you can't take the student loan interest deduction. And there are different things like that that you'll want to talk about with your tax advisor. Okay. So, line 3, did or will the IRS use the joint overpayment to pay any of the following legally enforceable past due debts owed only by your spouse? So, if you both owe back taxes, you're not an injured spouse, okay? But if it's only your spouse that owes, you would be the injured spouse because your refund shouldn't be going towards that. If your spouse is behind on child support, again, spousal support, or the federal non tax debt such as student loans, we're going to put yes. Otherwise, we would not be filling out this form, right? Now, there is a note here. If the past due amount is for a federal tax liability owed by both you and your spouse, you may qualify for innocent spouse relief for the year to which the joint overpayment was or will be applied. But that's a completely different situation. If you'd like me to do a video on filling out that form, just let me know and I can do one on that too. All right. Are you legally obligated to pay this past due amount? If yes, we're going to stop right here because you are not an injured spouse. If no, we're going to go to line 5A. Okay. So line 5A asks, were you a resident of a community property state at any time during the tax year entered on line 1? See instructions. The reason for this, in a community property state, they see any debt of your spouse as your debt too. Okay. Everything is joint. Now, and it's a joint 50-50. So the community property states that we have are Arizona, Wisconsin, California, Idaho, Louisiana, Nevada, New Mexico, Washington, and the state of Texas. Now, you can still do this, but you're going to need to look at revenue rulings. So for Arizona and Wisconsin, you're going to look at revenue ruling 2004-71. For California, Idaho, or Louisiana, you're going to look at revenue ruling 2004-72. Nevada, New Mexico, and Washington, you're going to look at revenue ruling 2004-73. And for Texas, you're going to look at revenue ruling 2004-74. Okay. But for the purposes of this example, we're going to say no so we can skip to line 6. Okay. So line 6 is you make and report payments such as federal income tax withholding or estimated tax payments. We're going to say yes because in this example, you work a W-2 job and you have withholding done. All right. So skip lines 7 through 9. If we weren't skipping 7 through 9, we would answer, do you have any earned income, such as wages, salaries, or self-employment income? And 8 is, did or will you claim the earned income credit or additional child tax credit? So what this is asking or trying to find out here is if you have any skin in the game as far as any estimated taxes or anything that you had withheld, or if your family's income is low, what portion of the additional child tax credit, which is refundable, or the earned income tax credit, which is also refundable, would be yours. All right. So let's look at line 9. Did or will you claim a refundable tax credit? This same thing is up here. These are credits that are going to be refundable, such as the American Opportunity Credit. That is for people in the first 4 years of college. Credit for federal taxes paid on fuels. Refundable prior year minimum tax credit. Health coverage tax credit. We have the premium tax credit. The recovery rebate credit, which we're all familiar with now, right? The stimulus checks, the refundable child tax credit, refundable child independent care credit, that was only for 2021. And then we also had the qualified sick and family leave credits for certain self-employed individuals. All right. But remember, we put yes here, so we're actually skipping this. So when we get to part 2, we're going to enter information about the joint return for which this form is filed. So here we have Jack T taxpayer. All right. Jack is going to be the injured spouse. And then we have Jill E, taxpayer. And of course, these aren't real social security numbers. So we're going to check this box only if you want your refund issued in both names. So because Jack's the injured spouse and they're in all this trouble because of Jill, he may decide, you know what, I don't want my refund check to have Jill's name on it, only mine. So what we're going to do right here is not check this box so that the refund, when it comes, it'll only have Jack's name on it. Do you want any injured spouse refund mailed to an address different from the one on your joint return? No, because they still live in the same home, so it's okay if the check goes to that house. Now, here is the fun part, right? For part 3, this is the allocation of the income and which spouse it belongs to. So I'm not going to actually fill this part out, but I'll tell you where to look for the information. So for the W-2s, you're going to look in box 1 of your W-2. This is the total combination of both of your W-2 income. This amount is going to be Jack's. This amount is going to be Jill's. Now, if they have any other income, let's say they have stock income or interest income, we're going to do the same thing. The total is going to be here. The amount that's Jack's is going to be here. The amount that's Jill's will be here. Now, let's say that they have interest income and it's from a joint savings account. What I do is you're going to split that 50-50. Okay. Now, if they have any adjustments to income, if it is something that they share, you can split it 50-50. Or if it's not something they share, you would not split 50-50. Let me give you an example. So we have an adjustment to income of, let's say, 2,500 for student loan interest. Well, we know that that's the max, even though a lot of people are paying over that in student loan interest. So for Jack, his share of student loan interest was actually only 1,000. Jill's was 1,500. So we're still gonna let her have that 1,500, okay? Now here on line 15, if you itemize, this is where it can get tricky. But if you use the standard deduction, you're just going to split that in half. So let's say that they use the standard deduction. So we have the 25,900, and then we'll just split that in half for each spouse, which my head is not doing that math very quickly. So I'll let you use your calculator. You want to make sure you use whatever the standard deduction is for the year that you're doing this, all right? So we have the non-refundable credits. Let's say they have a $2,000 lifetime learning credit because Jill is in school. Okay. So none of that would go to Jack. All of that would actually go to Jill. Refundable credits, they don't have any. So we're not going to put any in here. Any additional taxes, they don't have any. So we're not going to put anything here. Then we're going to look at the federal income tax withheld. Now, for the W-2s, what you're going to do is look at box 2 of the W-2s. If that's the only income with the interest income, we're going to put the total here. Then we're going to look at Jack's box number 2 and put that here. And we're going to put Jill's box number 2 and put that here. All right. And then any estimated tax payments they would have made. What this does, it looks at the portion of the tax liability that's Jack's and what he's paid in and what he would be owed. And then we look at the allocation of the tax liability that is Jill's and what she has paid and what she would be owed. Now, if we are sending this with the return, this part doesn't need to be signed because it'll already be e-filed. You want to make sure that if you are sending it by itself, that the injured spouse is the one that signs this. All right. The spouse that is, I don't want to say not injured, but the one that's the guilty party that has the debt, they do not need to sign it. If you are paying a professional to do this, make sure that the professional has printed their name, signed, their P10 should be here, which is the preparer tax identification number, and then they'll also have their firm's information here. Now, if you just go to Billy Bob somewhere, they do it for free, this will not be filled out. It's only filled out if you have a paid preparer. Okay. So when we mail this off, when we don't e-file it, you are going to want to make sure that you send it to the same Internal Revenue Service Center where your return would have been filed if you were mailing it. Okay. If you file it, I'm sorry, that's if you do it by paper. If you file it by itself after you filed your original return electronically, then you're going to send it to the Internal Revenue Service Center for the area where you live, which may be different, okay? When you do it with an amended return, 1040X or other return, you're going to send it to the Internal Revenue Service Center for the area where you live as well. Now, I hope that this was helpful. If you have any questions about this form, drop them down below. But I also want to invite you to subscribe to my blog at americasfavoriteea.com, where I also cover things like this and other tax relief options, but I go over them in more detail on my podcast, Tax Relief with Timalyn Bowens, and you can find us on your favorite podcast platform. And I highly recommend you subscribe because back taxes shouldn't ruin your life.